The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody in Trade Ideas Land. This is Steve, user number 3 with Trade Ideas, also an educator here at Trade Ideas, and I'm going to be hosting and also kicking off the webinar today for October 10th, Trade of the Week. Our marketing man, Scott, as some of you are probably going to be interested to know, is busy at work setting up the sequences for our next open house test drive. We call it a test drive now, where you can sample the product for 1 week, all the tools, premium, everything for $8.88. You've probably heard us doing this in the past. We try to do it once every 3 months or so. So the next one coming up, guys, is going to be October 23rd. So if you're not a current subscriber, you're thinking about it, October 23rd might be the date for you to hear here. I'm reading and trying to talk at the same time to hear more about it. Nathan is saying he can't hear or see anything. Andy, you see me, you hear me, right?
I do.
Anybody else? Anybody else hear me and see me okay? If somebody could just type in the question box. All right, thank you, David and Waleed. Awesome, nice to meet you, Waleed. Thank you, Bill, and Bill again. Sorry, Nathan. Let me just type to Nathan. It's on his end.
He says he can hear you now.
Good. All right. Glad to be with you, Nathan. So again, we're a quick test drive, 1 week, $8.88, coming up October 23rd. If you're kicking the tires, that's usually the best time of the quarter to come in and try everything for free. Well, for $8.88 for that matter. And we're going to do the same thing we did the last couple of quarterly test drives. We're going to turn that Friday tech support session that we always have from 2 to 11 East Coast, we're going to make that Monday through Friday. So we've cleared the books on the one-on-ones, because what happens is on the test drive is a lot of people come in and they want a quick learning curve. And so we're going to make ourselves available to y'all Monday through Friday, 11 a.m., 2 p.m. Eastern, in this exact format that we've got right here that we're talking about. So without further ado, let's just go ahead and kick off the webinar. Everybody can see and hear. That's good. Quick disclaimer, just the typical reminder that we are not brokers. We're not registered investment advisors. We did not take the fiduciary responsibility exams, and we don't collect fees and go play golf on those fees. That is for another segment. And if you're looking for financial advice, those are the people you need to go talk to. Brokers, series, whatever licenses they need to give you that advice, and the RIAs. We are just derelict traders and users of a great product, Trade Ideas, and we're here to share some content with you, and probably going to be a lot of Q&A today as well. So get your charts ready. There'll be a point in time when we get towards the end of the webinar where we're probably going to look at some charts, because that's always fun, and I enjoy doing that, and so does Andy. So disclaimer taken care of. We're not brokers. If you want trading advice, please seek a registered investment advisor. Real quickly, the slide of all slides. We always talk about this. As I said, 5 days a week, we've got content coming at you, whether it's a webinar like it is today, yesterday, Thursdays with Andy and Jamie, and then Friday, as mentioned, the support session down here on East Coast time. So every day of the week, we've got content and the ability to ask questions and use the GoToWebinar interface. We also have the live trading room, which Barry Anderson does a phenomenal job. I don't know of too many people that can handle the responsibility that he handles, trading his own account, moderating a room, and trust me, he keeps that room pretty moderated. If you've been in there, you know what I mean. And demonstrating in real time how to use the product and such like that. And in addition to some great traders in there. What's not on here is the typical one-on-one sessions, which, as I mentioned earlier, during the test drive week, October 23rd through the 27th, we will not be having any one-on-one scheduled, because this support session is going to be in effect Monday through Friday. So anybody, come one, come all. You don't have to be a test driver. You can be a long-time subscriber and take advantage of the Trade Ideas GoToWebinar that we're going to open up to the room that entire week. So one-on-ones, getting back to that, it's a great value. All you have to do is sign up for at least a 1 month minimum subscription, and you get 1 hour of coaching with one of the 4 of us now, Sean, Andy, myself, and Jamie. If you want to go beyond 1 hour free training, it's a $99 session. So when you consider the promo code that I'm going to give out here at the end of this slideshow, we will give you 15% off, and we will also make the point, what I'm trying to do is make the point that with that 15% off and the $99 value of a one-on-one session that you'll get within those first 30 days, that's a pretty invaluable proposition. You'll know very, very concisely after that first 30 days if Trade Ideas is the right platform for you. And judging by this particular graph, a lot of people have come to the conclusion that Trade Ideas is the right platform for them. This is our net subscriber growth over the last couple of years. The arrow here is when we introduced the AI Holly. But as you can see, the retail word is getting out. People are showing up in droves, and we are retaining a lot of people. And so we're very proud of that graph. And again, I think one of the reasons that's the case is the You're Not Alone with Trade Ideas. We do our best to try and get you up to speed as quickly as possible. Real quick, we still have this slide in here because it's still in beta, but this is not for beginning users. This is for intermediate, advanced users. If you want to turn your trading into something more automated, you can do so using the Brokerage Plus tool, but you have to be an Interactive Broker client, and you also have to be a Trade Ideas Premium subscriber to connect those two dots. Let me just, I think on the next slide, we'll come to that. No, we'll come to that. There was a great weekend of speakers that we had, and I've got a slide for you to show that, but I wanted to tie together the Brokerage Plus. There's a gentleman named Michael Noss. He's one of the speakers on that long video I'm going to show you later. He's on Twitter at Bonpara, and he is the auto trading master, and he did a great job of speaking last weekend, the weekend prior, because not too many people can trade and have that analytic mentality and at the same turnaround and be as concise and clear and communicate as easily as he did. So I was very impressed with Michael. He did a great job explaining auto trading. So anybody interested in that, it's still in beta with us. At some point it will come out of beta and it will be a lifetime license fee, but if you're a current subscriber with us when it does come out of beta, you'll be grandfathered in and there'll be no charge for it. But again, I strictly want to emphasize this is not a beginner's tool. You beginners out there, you got to give yourself 6-9 months to start learning how to crawl before you can walk. And I would consider this not walking. I would consider this running. So just a bit of a caveat there, but a very cool technology. The industry is slowly gravitating towards it. Common question, can I auto trade Holly? No, Holly is proprietary. There is nobody or no institution currently auto trading Holly, but what you can auto trade are your own custom scans that you've back tested or certain alerts that you've used over the years that you really like and trust, and having the ability to control and manage your downside risk when these orders get put through the Autobot. A lot of stuff going on there. We don't talk much about it beyond this slide here. If you want more information, you can go to trade-ideas.com/download, or if you want some more information given back to you, info@trade-ideas.com. Just say, hi, I'm looking for some more information on your Brokerage Plus auto trading. And again, that's pretty much all in the back end. The developers are taking care of the customer support on that beta program. But the slide here is to just let you guys know it is available. No man is better than a machine, and no machine is better than a man with a machine. Paul Tudor Jones, that quote never really gets old, and that's kind of the theme of what we offer. Trade Ideas is the machine, and you all are the human beings that have the discretionary power to work alongside with the machine. So really does ring true with this Paul Tudor Jones quote. The agenda today is pretty simple. To go through a little market recap, go through a Holly AI recap. The trade of the week this week, AQMS, once again had no trigger, but we'll talk about it. We'll talk about the genesis of that. I think it's time to take maybe a quick sector glance. Again, we'll take a look at all the sectors and maybe try and pull 3 or 4 out that look really good that you guys can write down on your scratch paper to keep an eye on tomorrow for possible strength into tomorrow. And then we do want to do some chart requests. So depending upon how much time we have, maybe 5 to 8 chart requests. Hold on to them now, but if you want to think about them, that's great. But wait for the starting gun, so to speak. So when we ask for chart symbols, we all have them in a row here in our questions box, and we can address them easily. All right, so let's close that, minimize that, and let's go to the market recap. And typically we kind of go through the 4 major ETFs, And a couple things of note here today. Well, first thing of note today was a real nasty open. Okay, I don't care who you are. Traders have a hard time trading gap and craps, and that's what we had today. We had a good old-fashioned gap and crap with a midday buy the effing dip. How do you like that for a synopsis, Andy? Gap and crap followed by midday BTFD. Didn't make it easy on traders, and I've got some empirical evidence to show you it didn't really make it easy on Holly, the AI, either earlier in the morning. But nonetheless, it's what we had. We had a market that gapped up. I'm not sure the reasons why. Maybe no news is good news coming out of North Korea. Some people thought there might be some geopolitical stuff going on October 10th, which was a anniversary holiday of theirs when the disgusting Kim family took over control of that country, which is now just one big giant cult. But back to price action, gapping up, hard to trade, especially when it comes all the way in, fills the gap, and then reverses on us and moves higher. So that was the case for the Qs as well. Qs actually closed the gap and then some, and then even went even lower midday. I think there was some craziness in Google and Amazon and Facebook and some stuff that came out midday, a couple of those stocks. But the FANG stocks not having a great day. They didn't really do a whole lot. But back to the Qs. Let's go now to our daily charts. Try and look at the bigger picture. So on the SPYs, this trend line is still very much intact. And as a matter of fact, we are getting a good distance away from this trend line, probably a standard deviation or two away from this trend line. And Andy and I were discussing looking at the spiders, very, very much overbought. But here's the thing, guys. Look at the spiders. They're not correcting in price. They're only correcting in time. They're moving sideways. That's the most bullish of the two scenarios for continuation type patterns, sideways consolidation versus pullback in price. You want to see another beauty of sideways? IWM, after this incredible rip-roaring run, has pulled back hardly anything. It's basically just 1, 2, 3, 4, 5, 6 days of sideways action. In my experience, guys, this is still very much path of least resistance remains up. Just like I said earlier, pullback in price, not quite as bullish as a sideways consolidation over time in price. Just kind of waiting for the buyers and the moving averages to catch back up and possibly push this thing higher. So we're kind of stuck in a market that's a bit overbought. Yesterday it gapped open and sold off with a red bar. Today it gapped up higher, sold off, went back higher, and finished in a perfect doji. That's a doji candle there, which basically means nobody won, nobody lost. It was just a complete stalemate. The Qs, nice bottoming tail towards the end of the day as the buyers did come back in, as they have been supporting this market day in, day out, week in, week out. So kind of a bullish candle there on the downward pin action, bottoming tail. The Dow actually made new highs today. So we're in this incredibly overbought period, and Andy and I were discussing this market needs a shower. And when we say it needs a shower in terms of some sort of reset button where we can get another nice, maybe a couple days of pullback, reset some of these charts, and let some setups start to develop again. Because, all we've got pretty much here so far is the train's left the station, and are you bold enough to chase it? And I think that was it for all the charts. Yeah, for the most part. Anything you want to add, Andy? I know I'm probably missing something here on the.
Well, you covered it now. You actually covered it really, really well. And you're right. It does need a big, I don't want to say correction, but I would love a correction, but it needs some sort of pullback. It makes it very difficult because what you have now is just a pretty much a low volume melt up, which is kind of difficult if you're an active trader. If you've been sitting in passive funds forever, hey, more power to you. You're completely content with this move, and I don't blame you. But I've been saying for a long time, I hate to say it, but it feels like a black swan is the only thing that's going to take this market down. You have these free money conditions out there. Yeah, you have these central banks, and it's I mean, God forbid we ever get one, because I think it could be just catastrophic. But when you had a market this overbought like this, but nonetheless, it's age-long question. What drives markets? Is it fundamentals or is it sentiment? What? And I'm a true believer that it's sentiment, because how else do you get the dot-com bubble so overvalued? It's not because of fundamentals. So and there's no more bears in the market. So
Let's say
yeah, so it's going to keep melting higher.
Yeah, let's say you started trading this market 5 years ago. That's a long time. You can become a great trader in 5 years' time. The problem is those people have not seen a bear market yet.
Mm-mm.
When it comes, it's going to be ugly.
Mm-hmm.
And that's a great dovetail segue into the video that I'll show the link at the end of the program of the speakers we had this weekend. Brian Shannon, I think, did a great service to traders by talking about when it happens, okay? Not if, but when. Nobody knows when. Don't know when. Not going to try and profess I know when. Like Andy said, we all try and quantify and pigeonhole, okay, North Korea, okay, the Fed, okay, elections, okay, tax reform. And just when you think you got everything figured out of the blue comes what's called a black swan, something that nobody thought about, nobody put in their models, and it takes the market down. So getting back to Brian, again, his speech and his talk was how to trade the market when it changes. And so if one of you heard me say you've been trading the market for 5 years and you've never seen a bear market and that resonated with you, I highly recommend that you watch the Brian Shannon Alpha Trends keynote speech, which I will point you towards at the end, because he kind of takes it into the 10th inning and says, okay, shorting is a different animal, and it's harder than buying the dip type market. So here are some thoughts and here are some ideas for when that does happen. So you guys might want to do yourself a good service and check out that video, because I think he did a great job in not talking about what everybody under the sun is talking about right now, which is how to buy the dip, but how to think upside down and turn charts upside down when the selling does come back. So a little bit off topic there, but I did want to plug my good friend Brian because he did make a great speech. But back to the markets here. Overbought. We're not pulling back in price. We're showing the propensity to maybe even move higher with the IWM and the SPY sliding pretty much just sideways rather than pulling back in price. So path of least resistance is still up. Wouldn't mind seeing a watershed day or two where we can clean out and reset a lot of these charts, where we can start to get back to levels of breakouts again rather than just day after day after day after green bar, green bar, green bar. So that is the market recap. Path of least resistance still up. No reason to be bearish. Typical day. Buyers step in towards the end of the day and prop this market back up. But as we segue into Holly, gap ups with a gap and crap all the way down to close the gap and then chop around for a while. It's not easy for human traders, and it's not easy for robot AI traders. I screenshot this with about 2.5 hours still left to go in the day. I mean, look at this histogram. Holly's losing money, Holly's making money, back to losing money, back to making money, back to quick losing, back to... So when you see this is noise with a capital N. And when we have that much noise in the histogram, the AI, remember, we like to refer to as our canary in the coal mine. What's going on with the canary in the coal mine? Are there gases that are out there that we can't see? Or Dan even likes to use the metaphor of surfers, since we're out here on the West Coast in California. Sometimes you'll pull up with your surfboard and you'll look out there and you'll see a guy just getting crushed in these waves that have no left or right. They're just barreling and pounding, and you're like, okay, maybe I want to sit and wait and see what happens when the tide goes out a little bit. Maybe things will change. So that was screenshot number one. Screenshot number two was even earlier today, as the market was struggling an hour after the open. This was a tweet that I put out there. Again, the canary in the coal mine, showing us after only 2 trades, just couldn't find the hookup, just could not get hitched to the right side. So no edge. Again, the canary in the coal mine can tell us no edge based on trade frequency and based on the histogram. But this messy histogram, as soon as I saw this, I said I really need to screenshot this, because this did tell the story for the first half, or the first 2/3 of the day. And I think Andy's got some ideas on how to expand on that. So first 2/3, first half of the day, the canary in the coal mine, Holly, was saying, be careful, I'm struggling here. I'm not seeing the market like I thought I would, but all of a sudden, I don't even have to shift gears here. Here's the spiders. Boom. Buyers step in. a little bit of congestion, buyers step in towards the close, even more so in the Qs coming off the bottom. Diamonds never even really sold off that much, and they finished at or near highs for the day. So again, the histogram of the risk on mode, meaning not exiting the trade called by Holly. When Holly exits in 45 minutes, what happens if we stay in the trade longer? Well, one of the biggest tells we have as to whether or not to do that is to see what's the market doing. I guarantee you, if the Dow and the spiders and the Qs closed their gap and kept going to new lows, we would not have this risk on histogram as green as it was. But when we have the market at the end of the day turning and the buyers coming back in and buying the dip, then you start to get stocks that were strong in the morning or holding on that were called out by Holly but just ran out of time, and they start to pick up as the market does. So I think you have a couple thoughts on a few of those stocks, don't you, Andy?
Yeah, absolutely, Steve. Because and Steve's right. The first.
Where's your mic? Is your microphone over your head?
Thank you.
Yeah, sure.
I had pushed it up because I felt a sneeze coming. I wasn't sure if I was going to be able to make it to the mute.
Gotcha.
All right, so Steve, I'm going to be looking kind of at my screen because I kind of want to go through the time of the day, but you'll be able to find these. And Steve is right. We did have the first 3 hours of the day, the histogram was a mess, probably because the market was a mess. I mean, we basically opened up. We had a quick head fake to the upside in the overall market, and then basically sold off for 2.5, 3 hours. But after that time, Holly started settling down, and not only did a few of the trades perform well, but a few of her alerts, I should call them trade alerts, that came after that period performed very well as well. So I want to start out with UBNT though, because this is one that was fired after about 25 minutes when the market was open. And as you can see there, the market kind of had gapped up and was selling off all morning. But this one was going just the opposite. That's what you call relative strength. Mm-hmm. Okay, you have a stock just totally ignoring the pin action in the overall market, and buyers are just coming in and buying this. And so when you see that, I mean, yes, it's kind of tough to go in and buy something when the market continues to kind of sell off and looks like it's going to potentially fill the gap, and I think it did. But here's a case where Holly made this call, and after that call, there wasn't very much pain at all. Now she ended up getting out, after about. I'm sorry.
Timed exit, yes.
Yep. It was a timed exit. It wasn't a very long hold, I can tell by the chart here, but so it must have been probably a
90-minute bullish trend change. Here's what we do, guys: bullish trend change, parent window, bullish trend change, 90-minute hold time.
Okay. All right. So we had a 90-minute hold time. So if you're in this and you see Holly bail, okay, and the chart is still pretty much holding up very well. You can see in the darker edges where it turns lighter, where she got out. Maybe instead of saying to yourself, okay, I'm going to take this 10 cents with Holly, maybe you say, you know what, I'm going to scratch or take a nickel and I'm going to stay in this trade, because there was another, 50 or 60 cents worth of alpha there had you stayed in that trade. This is not one, I'm not one that's going to grab hog the first trade of the day and give you a trade around after it sells, after you stops out and goes 30 or 40 cents lower. That's tough to do. But this is an example of a stock that remains pretty much strong all day, and there was really no reason to get out. So don't always look at the market, whether you gauge your risk on and risk off, okay? You can, because people will argue, oh, it's kind of a risk off day, it's a doji, sloppy action. But if a chart is holding up, and really as I look at the 15-minute bars where Holly got out, she didn't do a bar reversal, and as a matter of fact, she had another 4 bars straight up before she even had a bar reversal. So that's a good example of relative strength and maybe staying in the trade because there was really no reason to get out of it. All right, the next one I want to highlight is, I'm just going to touch on about 3 of them, is CLSN. This came out about 3 hours, okay? The market finally kind of got a bottom. Then Holly started firing off some pretty good trades. One of them was CLSN. Just a beautiful pullback there. You can see it on the 15-minute chart. Holly gets hit. Alert fires off at 429. wow, just no real. The low was 423, so the worst was 6 cents against you, and man, just a nice pop there. Geez, what was the profit percentage on that? 8%.
8%. Yep.
But even more than that, I think that 8% that's at the
That was risk off.
off. Okay. Okay.
Yeah.
So yeah, Holly made a good exit there. You can see Holly made a good exit there. So, and you can look at the daily chart. You can see where it was breaking out kind of a 4-day high there, 3-day, 4-day high.
Yep.
You about to say something? You want to add
No,
something
I was
to
just
that?
going to say I drew
Okay.
that line pretty much right where I was drawing that line intraday here for that little pullback. That's about as bad as it got. And if you don't realize that when we draw lines like this, they superimpose onto the next chart. So even though I drew this line using this wick on a 15-minute candle, saying, okay, this would probably be my out if the trade doesn't work. That's where it held support intraday. Well, as it were, it just so happens to superimpose onto the daily chart right at the high of this candle back here. So a lot of times those are not coincidences. Algorithms look back in the past on the data on the daily charts and try to discern levels of pivots, supports, resistance, etc. So a lot of times when you see a level that makes sense intraday, it also makes sense on the daily chart. That's what I was pointing towards.
Mm-hmm. Absolutely, and good volume in that chart too. You know, that was one that was very liquid. So yeah, there's a great trade there, trading opportunity, I should say. And the last one is one that was one of our best trade of the weeks, and that's Weight Watchers. I'm going to go over because this was a very good trade. And look at the time, 3.5 hours after, no, sorry, 3 hours and basically 20 minutes after the market kind of finally settled down and found the bottom. And then you had Weight Watchers there on a beautiful entry. And what strategy was that? That was tailwind, which often picks them up on a pullback. And once again, very little
Stress.
pain at all.
Mm-hmm.
Pain, yeah. He had one little glitch down there where it may have went against you 10 cents, but other than that, or maybe not even that much, maybe nickel. So yeah, and from that point on, the market really never did sell off. So I don't see any real reason to panic out of that trade. And that one was a risk off of 65 cents, and had you held it to the close, risk on of 85 cents. So really, considering the day, a very sloppy day, not a bad day. It took her a while to get out of the blocks, but look at this market, but she put on, there was definitely some opportunity there today, for sure.
All right. Okay. So let's move forward to trade of the week, I believe. No trigger once again. Interestingly enough, we had a trade of the week 2-3 weeks ago, JSO, which never triggered off of this candle. We got kind of the same thing that happened again this week. We're trying to be very, very selective and cautious and not let trades go live unless they trigger above the point that we're looking for. In this particular case, there was a couple things going on here. Holly had actually bought the stock and sold it on Friday going into the weekend, and it had that trend change lubricant kind of effect look to it. Additionally, it looked like it might even be coming down, having filled the gap, and then moving back above to do what I call like a horseshoe pattern, a big U-shaped pattern, which is fractal in nature. It can be on a 15-minute chart. It can be on a daily chart. So there was that going as well. But we got very close to a trigger. The trigger was essentially the high from Friday, and the high from Friday was never taken out. So we're back in that situation again where kind of no harm, no foul. We had something that we could look at. But that's trading, folks. I mean, when you look at my price alerts, not all of them have triggered. Some of them have been waiting for a couple weeks, and I got to go in and just clean them out because, the entire setup has basically changed, much like the entire setup from JSO 3 weeks ago has pretty much entirely changed from this big hammer candle that we were looking for follow through on. So it's going to happen from time to time. This market is going higher. It seems to be doing it on fewer and fewer select stocks. That's just my personal opinion. But once again, it looks as if no harm, no foul. I don't think that this is going to turn around and trigger. However, if it does trigger between now and Friday, technically this trade is still still active. So if we make it into the weekend without a QMS triggering and taking out Friday's high right here, it's going to be a no trade. But for the moment, it is going the opposite direction, but there is no trigger. There is no event to look back on. So we'll just kind of see how that one works out. Typically, the trend change type of trades with good short float interest have been the ones that have been working. But I can honestly tell you, yes, for the last 3 or 4 weeks, these trades have kind of gone soft a little bit. So we may be looking at some different strategies and scans this weekend to maybe make an adjustment based on the softness that has happened in the last few weeks here on the trade of the week. Anything you want to add to the trade of the week?
No, I agree. It's a tough environment right now when you have this melt up, and we talk about how you have this, money just kind of passing around the baton, from one sector to the next. It's been crazy like this for a while. I can remember talking to Joe Fammy at an event. I think it was like Stocktoberfest or something like that, and we both agreed. It's like, gosh, I've never seen anything like this. Stocks will be falling apart, and yet the major averages just keep kind of levitating and hanging on. And that's what you have when you have this funds being just shuffled from one sector to the next. And it's pretty crazy, and it's almost like a carnival, man. Guess the next sector that's going to pop.
Yes. Speaking of that. Let's go ahead and take a look at some sector biases here and see if we can find a couple of interesting sectors to take a look at. All right, let's start with my sector analysis here. All right, oil, big gap up today. This is a commodity, difficult to trade. You're going to get a lot of these types of gaps back and forth. Nothing really special there. Natural gas, pretty similar thing. I'm going to open up this daily chart because this is really what we're looking at. And natural gas is an ETF that likes to gap as well, and also goes crazy when the numbers come out for the natural gas inventories build. I'm not seeing anything there of interest at all. Wow. Next is the solars. This is getting kind of interesting. The solars, very strong support here on this TAN ETF here at 2108. Bounced off at a third or fourth time. Looks like it tried to sell off yesterday, but did a nice little reversal today. So maybe we're going to build off of this and start to head back towards possible highs. I think solars might be one to keep an eye on based on the action today. We'll see what goes on. All right. K-Web is just, interesting chart. But these are your China stocks for the most part. This is one of the few ETFs you can use. K-Web. Actually, looks like Holly tried to enter that last week, was seeing something that we weren't seeing. But I'm going to add this one to the list as well. Matter of fact, what I'm going to do with this one is we're going to go right to price alerts because this one is trying to make a new high. So K-Web, China stocks, new highs. That's my note to myself. Here comes the blue line. The blue line is now, in effect, a working alert. And might be as early as tomorrow if we see a trade through the blue line and you guys get the same triggers and you're setting the same alerts I am. What does that mean? Well, that means China stocks might be in play. If Holly spits out any China stocks, you might want to give it a second look. If any of your scans that you guys use or any of the alerts that you guys build start spitting out some Chinese names, it might be worth a second look. How are you going to know if it is or not? Well, a single stock window usually certainly helps you. If you click on any single stock down here, you'll notice that it changes, and you can get a pretty good idea of the summary and the profile and what sector it basically belongs in. So single stock window is always your friend when you're cycling through things. So interesting, solar and China. Okay, so far the most interesting. Oh boy. This might be the most interesting of all. We got ourselves a good old-fashioned flag pattern here in the KRE, which I believe is the national banks, regional banks, not the nationals. This is the best looking thing I've seen yet. So we're going to mark this up, price alert. Regional banks, new highs. Again, just like I said a moment ago with the K-Web stocks, if this thing triggers, you guys might want to start paying attention to regional banks. as they seem to be showing a very nice flagging pattern once again. Like I mentioned earlier, not too much pullback and consolidation in price, but a lot of sideways action. And again, it's just like, trying to find the potential energy to find the right moment in time to beat through the crack in the ceiling. And a lot of times sideways action can do that and follow through a lot easier than a very deep pullback. I mean, KRE could have easily had a very deep pullback down here to fill this gap, but it didn't. And that's bullish. All right.
Mm-hmm.
So let's keep that one on the watch radar. Silver, these are commodities. I don't recommend them. The gap extremely aggressively up or down overnight, so difficult to trade. Here's the sisters, the national banks, the KBE. So naturally, we're going to want to, they're probably going to trigger at the same time. I'm not going to set a similar alert, but very similar. Of course, also the KBE, the national banks could have very easily pulled back to fill this gap, and they didn't. Again, very bullish sign. XLF, I imagine, is going to look kind of the same, except it's a bit more extended. The banks have had that nice choppiness, that flagging, again, visually there and visually here. Nice consolidation. I prefer that consolidation anytime over the train's left the station. Do you want to be the guy to jump in and hopefully the musical chairs doesn't stop and you're looking for a chair? But XLF is definitely like, a parent component of the banks for sure. But it seems like the banks are
also includes the brokers too.
And broker dealers, okay. Agriculture, kind of a weird ETF, the MOO, but it's showing some strength. And again, not really sure what some of the main some of the main guys are here, but I'm just going to draw a quick line. And CF Industries, Mosaic Industries, potash, anything that has to do with chemicals, agriculture, could be a beneficiary if this particular ETF breaks out higher. All right, steel. How's steel looking? No man's land. It had a chance to come up and test highs, but it didn't. It's just dropping back into the range. Maybe we'll look back in a month or so, and steel's slowly going to paint itself into a wedge. Could be what's happening there, but nothing at the moment. Semis are just way too far ahead of themselves. And geez, even with that wick today, I mean, if that wick was upside down, I'd be saying, oh boy, get ready. The semis are getting ready to correct with an upside tail wick, but it doesn't. It has a bullish downside tail wick. I know NVIDIA was absolutely on fire today. You can't stop MU. No. Oh my gosh, I think AMD is not really in that mix, but NVIDIA and MU, which, by the way, was a trade of the week a few months ago, but you did have to sit through earnings if you were inclined to. So semis, back to semis, not it feels like a chase up here. In all honesty, the semis could come down to this general area, maybe pull back at some point and then dig in. But looking at these levels, no new fresh entries. Diamonds, spiders, we've gone through those. Gold, same as the silver, I should say, gaps up a lot overnight. So you got to be really cautious on the commodities: oil, silver, gold, natural gas. You're going to get these kind of charts. Not really the best. They can be okay for day trading if they make a move, but swing trading, you have zero control overnight unless you're hedging with a futures account, which I venture to guess most of you are not. IWM, we talked about that. Again, the sideways action is kind of like those regional banks looking for a reason to pop higher. Healthcare kind of petered out, not so much as a new high, so kind of in no man's land for healthcare there. And as we get lower down the rung here today, we might not see as many opportunities. Retail just really fell out of bed yesterday. But for the most part, you guys can see that seems to be the line for XRT recently. A lot of supply, a lot of selling coming into place up here, and we basically backed away from it quickly today, so nothing for tomorrow of interest there. Energy was doing well, some sideways action, but really put on a clunker today. Gapped up and did not bounce with the rest of the market. XLE might have a little bit more to work off there. Qs, we've done that. The biotechs, interesting, not bad. Making newer highs, higher low, possibly a higher low. This could also be possibly a flag, but I think it does warrant at least putting in a price alert. IBB Biotech's new recent high. So if this alert were to go off, and all of a sudden you might start focusing on stuff that's coming through your alerts in the biotech or pharma. All right, okay, so The next one is commercial real estate. Nothing. No man's land. A lot of wicks. This thing looks like it just
Yeah.
channels back and forth, and the
Yeah.
institutions probably just slowly ebb in and flow out. XLK, the technology spider, is what it's called.
It's a lot
Again,
like the semis.
looks a lot like the semis,
Yeah,
exactly.
look at that.
Okay, XLK, SMH.
Hmm.
XLK must be heavily weighted with
Yeah.
semiconductors. So same thing goes there. Probably wouldn't be too inclined to chase up here after it's had 2 good solid weeks of running. Again, imprinting more interested in these types of charts. Nice move with sideways consolidation. I mean, I'll even throw IWM in there. Sideways consolidation, very impressive, not giving back hardly any of what it took. Could easily come back and fill the gap, but it hasn't. Again, very bullish. Treasuries, forget those. Home builders, wow, they've had a nice move. They put in a higher low, and now they're starting to flag. So
Hmm.
don't know much about, tomorrow. I kind of got a feeling that they may want to come back and test a little bit more of a pullback, maybe something like that. But I'm going to keep that one off the short list today. Oil, absolutely hideous, gapped up and never even looked back. So we'll keep that big red candle. And then gold miners that were strong yesterday and Friday gave some back today. Junior gold miners. So like Andy said, the game is pass the baton about as quickly as you can pass it. What's in favor one day might not be in favor the next day. So if we can get some chance favors the prepared mind, if I just rehash here, Andy, if I recall, solars were interesting. So if you guys want to write down solar stocks, could be interesting tomorrow. China stocks could be interesting tomorrow. And the banking stocks could definitely be interested tomorrow. And those are 3 probably really good sectors to focus on. That KBE, really, really nice.
Looks tasty.
Very tasty. Why is it tasty? Because it's just going sideways, looking for an excuse, looking for a hot shower and a hot meal and a reason to push through the ceiling and move forward. Not so much with, the SMHs. You're kind of chasing a train that left the station already. All right. So that's that for sectors. Now I'm going to ring the bell, guys, in the next 5, 6, 7 minutes. If you guys want to put in some stock symbols, we can probably do 6, 7, or 8 or so. Helps to know if you're long, if you're short, if you're thinking about long, thinking about short. Any information you want to give us on some of these stock symbols, we'll be happy to take a look. All right. Is that snack or shack? Okay, so snack. Let's go back to our daily chart here. Looks like Holly liked it a few days ago, Christopher. I'm going to take that this was earnings coming off here. What do we got? Food manufacturing, short float, 13%. So it's probably working off some of that short float because I guarantee you the people that were short were probably all short down here before the big gap up, and now they're all out of the money trying to work out of the position. But if we go back any farther, we start to see some things. I'm seeing something right here. I'm seeing definitely something right here.
Which it looks like it's trying to fight above and hold it actually right now. And that's
okay. So here's, and he's right there, Christopher. This is the most interesting piece to me right here. Prior resistance back here, sellers came in and won the day and pushed the stock price lower. Probably even added to their shorts. So probably not a big surprise that we wicked through and pulled back, closed right on it, wicked down, back, closed right on it, wicked above, closed above, wicked above. 2 days in a row with a doji close. But the most important thing is that it's closing now above this pivot line. You get a few more days like that where the close continues to close above that pivot line, and you're going to start to get some nervous short sellers. So I would use that level as your first level of defense. If it breaks it, you probably don't want to see it take out the low of that wick back there, because here is where buyers just 2 days, 3 days ago stepped in and said, nope, we're going to take control at this level. So if you lose this level, then you may want to consider risk management at that point. All right. Conn, C-O-N-N long. Well, it looks like it tried to fill the gap. And David says long, so I assume you're long, David. I don't know where you're long. You don't have to tell me, but the gap is still in play here. The gap is still in play. Let me look back even farther and see where we are. Okay, so this was a major, major resistance level. Oops, sorry, that was my bad. Okay, let's go back to these levels as well. Take a look at that. Zoom in. So we can see a lot of congestion here at that level. It can't decide what it wants to do. And again, that level comes into play from looking left all the way back here where the sellers once were in dominant control. It's very possible, it's very possible, David, that you could see some sort of an attempt to flush down and fill the gap on the open. And I would watch it closely. If you put your hard stop in there and they get you, well, then they got you. So it really is up to you if you want to risk the gap closure or not. Chances are it could come down. In a perfect world, David, it will come down and close that gap in the first 5 minutes and bounce right back up and give you a nice wick. If it does that, then you know, okay, all right, that was good. That was quick and fast, but at least I know that I've got some support here and some buyers, and then that would become your downside. The upside is obviously to get back above this congestion and make some nice closes above that congestion. All right, next one, P price line. All over the place. Seeing a lot of congestion right in here in this level from prior, which is probably one of the reasons that we did bounce off that level today. But the good news is, I don't know where you're long, but 1, 2, 3, 4, 5, 6, 7 days of green candles. That's why we typically say, don't try and chase the train that's leaving the station. And there's another good point. You guys are saying, oh, but Steve, you always talk about prior resistance. Well, sure, there's prior resistance, but how much energy did it expend getting to that prior resistance level? It kind of blew all of its energy getting to that level, and now it's it's kind of fatigued and punch drunk. So maybe ideally it pulls back not too much and settles in and looks for another move higher. If you can get back above this second level here, you still have all this void, and charts sometimes have a gravitational effect or a vacuum effect to pull the price action up into the void. So I don't know when your entry was, and again, that's not important, but what is important for everybody looking at this chart is that it expended a lot of energy getting to this point. So that red candle is probably not too surprising. Okay. Real quick, Jared, I see your question. I'm happy to answer. Jared is watching me do a lot of this, a lot of zooming in and zooming out. And it's not really super counterintuitive unless you got somebody like us to show you. The answer, Jared, is to hold down the control key, and that will give you the zoom. This is what happens if I don't hold down the control key. I start going backwards, and that is useless. We need to have all the data in the window. Then you get the whole control key down, and the mouse wheel is your friend, zooming in and zooming out. Hope that helped you, Jared. Okay, we did price line CMG. I think this is our fourth one. CMG, okay, well.
Trying to put in a base.
It's definitely in a downtrend. Let's see how far back we can go. Can't see too much, but all we're really going to have to go on here is this data. So one thing of note is there's a really nice bottoming tail here, and if you'll notice, if I zoom in even more, that bottoming tail, I'm going to draw a bottom under this wick here. That bottoming tail essentially was looking to run the stops. So that's the good news. Whatever this level is here, 296, the buyers stepped in very quickly. There was an attempt to move the price below this level, and there was a quick reversal where the buyers stepped in. Next level, a little bit higher, so that's worth note as well. So this is kind of your danger zone down here, all right? And then obviously there's your upside. So CMG is basically in the middle of this range. It's in no man's land right now. So plan accordingly. This should be a yellow alert right here if it takes out this level. If it takes out this level down here, that's red alert because prior to that, the buyers stepped in with that particular candle.
Yeah. And as tempting as it is sometimes to, catch get these stocks that are consolidating near a base on lows for the year, you're better off waiting for it to clear out of that base to the upside. Because I'm going to play the devil's advocate, because Steve just showed you how it looks like it's putting in a bottom, but a bear may be saying, okay, we have a downtrending stock that's now consolidating sideways, just the opposite of what we showed you WM was doing. It moved up and was consolidating sideways. Well, now you have a CMG that is pretty much consolidating sideways after a huge downward move. So that could be a continuation move lower as well.
Just like like on the upside, like Andy said.
Mm-hmm.
All right, Frank, you snuck 3 in there. You got Priceline and CMG, so I got to skip over your last one and bring some other people in. John is looking for TGB. Okay. What do we got here? Mining stock, Taseko Mines. What do they mine? Oil and gas. Okay, so they're an oil and gas miner. They're not they do some metal ore mining, all other metals. Mining company developed. See, I'm confused here. Not that I want to get too
Yeah, I
caught
remember.
up on
I
this.
think they definitely do some gold and silver mining because I remember playing this in the past back in my days.
Well, if that's the case, I mean, if I type in GDX here, you'll see, in the last 4, 5, 6 days, that would make sense because it's probably mirroring some of the strength that we had in the mining index. Big tail right here is a bit of a caution flag, especially after a big run up. So I'm going to try and make this one as simple as I can. Trade Ideas is saying your suggested stop is right there at 208. I'm going to take it a bit lower and look down here at prior resistance could become current support. That's going to be the level that you want to hold. But keep in mind, you've had, 1, 2, 3, red bar ignored, 5, 6, 7, 8, red bar ignored, 9. You've had a lot of nice days up. This thing could be ready for a breather. So that's my 2 cents, especially when I see these long, tall wicks like we had yesterday. All right, Bristol Myers long. Nice trend. Okay, so there was the beginning of the breakout of, okay, we got a story here. So probably bad earnings. Looks like Holly shorted it up here back then. We got these tags now. Bad earnings, all of this mess down here, buy, sell, buy, sell, buy, sell. But now we are back to where the short sellers are looking at this saying, look, we've been in control down here underneath 64, 63. And we were in great control down here at 46. But now we're threatening the most obvious resistance level. If we zoom in, we got some good work here. A lot of attempts to push through, closed through that day, closed down below it yesterday, but a nice candle closing back above today. The more times you can get a close above this price of 64.64, the better the chance that the bulls will feel emboldened. No short float really to speak of, so we don't really have a short squeeze component in there. But the price action's nice. Look at how we moved higher, consolidated sideways, and just moving higher. So very, very big level. Again, that big level corresponds to the high of that wick right there after a big, probably bad earnings miss. Now, just like I said on the last chart, we're back into the void where the vacuum cleaner could start pulling the price higher. Not a bad looking chart there. Got time for 1 or 2 more. PayPal, I'm happy to look at PayPal. I know exactly what this chart looks like. You cannot stop this chart. And we are in a perfect trend. So let's do this perhaps. Let's go ahead and go into the trend line section. Quick trend line, pop, grab that. I will pull this up to that area. I lost my, let me grab this one. Looking for those little squares down there. Let's just start looking at trend lines here. Let's see what we got. Yep. Pretty cut and dry. Bounce, 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 bounce. I'm just going to keep this one as simple as possible. When you see a stock that's been trending as long as this one has, trend line is your friend. We got a bit above it, kind of like I said in the spiders. When I talked about the spiders, here's the trend line, the running trend line in the spiders. Getting a bit ahead of it, may be ready for some sort of a pullback. But that may be with the beginnings of what PayPal did today. But that trend line is going to be your downside risk management level to who asked that question there. Anurag. Okay. We got time for 2 more. SPHS. Okay, this one looks a little spotty, so the first thing I do is I go to average daily volume, 213,000 shares. Kind of on the low end, but that's how those charts are going to look. A lot of wicks, a lot of spikes for stocks that don't do quite 300,000 shares. Good news is for you, I see a very formidable resistance pivot level. It was support for the most part back here and here. Even though it wicked below, it still closed above here. and then it turned into resistance here and turned into resistance just above here. So the good news is we have cleared it. Bit of a volatile average true range today. Again, a lower volume average daily 200,000 can be a bit squirrely. I wouldn't be surprised, to see a possible pullback and a test of 236. As I say in the past many times, prior resistance can become tested and to see if it will in fact become current support. So a giant candle on the upside and downside, a big wide range today. Don't be surprised if it comes back, but I don't know. Upside, this level probably right here could be considered, those two tops could be considered interesting upside resistance, but your downside is definitely going to be this level right here, hoping that we have a pivot line where resistance becomes future support. And Josh, I'm saving the last one for you. ECYT. Oops, ECYT. And saw it show up on the email regarding the 3 sectors to watch. It was in the most likely to bounce after a gap down. I'm looking to get long. I got a bad feeling about this one, Josh, and I think Andy might agree with me. When you see stocks that are just dead like this, then all of a sudden, giant candle, giant gap, giant news, and then we're on the other side of the mountain now. I call this the other side of the mountain. I can guarantee you I know by name probably 2 or 3 traders that are short this thing and probably started shorting it up here, and they'll just keep adding to it. They'll just keep adding to it. More than likely, it's going to want to tickle this level here and see if there's any stops underneath there, and if there are, we got one giant gap to deal with. So essentially, the first day and maybe some of the second day might have been the best of the action in this stock. But right now, I call this stock, it's on the other side of the mountain. The action occurred, and now it's just kind of look the volume down here. I know it's hard to see, but look at the volume on the upside, and now we're just sinking back down on low volume. And I know people that have a strategy. They call these things junk stocks. Oh, yeah, this thing's a junk stock. It's a pharmaceutical stock. You had people come in here and raise the price. They're probably going to offer a secondary. Hammer this thing. It's deadwood. Hammer, 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 hammer. I don't know where that's going to stop, so I don't have a great feeling about any entry at these levels long.
No.
Andy, you have any different thoughts?
Yeah, I mean, if you want to play something like that just for a momentum trade, I would actually like to see it take out basically a 4-day high right there. That last green bar, I would want to see it take out, yep, pretty much right there. Because what you might have is a lot of people getting short up here, and then if it does get above that level, you could see a squeeze.
Right.
That being said, I would not want it to reverse at all. In other words, I don't want it. If I do enter a trade like that and play the momentum, I want it to immediately go and not come back, go 20 cents, 30 cents. No, just go.
To me, it almost seems like a foregone conclusion. It's going to want to test this level down here, so I wouldn't mess with it. And yeah, David chimed in. You're right, a pump and dump. This is kind of the anatomy of pump and dump. This is the Tim Sykes method of finding stocks that pump and then release news or secondaries or dilute their stock, and then the short sellers just clean up day after day, week after week as they just come back down to reality. So I'd kind of stay away from that one. That's just my honest opinion. All right, guys, top of the hour. So let me bring on the slides. For those that, I know I didn't do a poll today. That was my bad. I forgot. But real quick here, if we just go through to the next slide. As I mentioned earlier, I mentioned Michael Noss, and I mentioned Brian Shannon. All you guys got to do is go to trade-ideaslive.com/live stream. This is the raw video that went all day long, but notice time codes and chapters. Time codes and chapters have been added to the description. So you should be able to go in there and find Michael Noss and start the start time at his for some auto trading brilliance, and then find the keynote speaker, Brian Shannon at Alpha Trends. Again, he's going to start to give you guys some heads up on what to expect when the market does in fact turn on us. Podcast every Friday, to be announced kind of at the last minute as to who is on the podcast. Typically it's 1 or 2 of us, and we try to find people outside the industry with some interesting stories, and we just kind of riff and chat and You just hear a couple traders talking about some topics for 20 minutes or so, and it's usually some good insight in there. Here we go. The weekly trade, all capitals, is going to be your promo code, 15% off first month or first year premium. All you have to do is type in all caps weekly trade. When you get to the sign out section of signing up for a subscription, it'll ask if you have a promo code. That's where you would enter it. Quick difference between the standard version, the premium. A lot of people do start with standard just to get their feet wet and understand the differences between the scans, and then move on to the premium so they can start back testing their scans, share price alerts, create price alerts, and also have access to our intelligent tool, Holly, the AI. Thank you all again for showing up. If you want to follow myself at Today Trader on Twitter, I'm there. Our unique CEO, Dan Merkin, is at Trade Ideas #1. The best place to start for any question you guys have is info@trade-ideas.com, and that will be triaged and routed to the right department, whether it's accounting or brokerage plus, as I talked about, or hey, my scan, can you help me with this? Anything under the sun, best place to start is info@trade-ideas.com. I can tell you the phone number really is only good for accounting questions, and get ready to leave a voicemail, and one of the accounting people will make phone call returns throughout the day, but keep that voicemail for accounting issues only. If you want immediate assistance, info@trade-ideas.com, or you can just go to trade-ideas.com in general during market hours, and we have a live chat. So you can speak with anybody in the live chat there as well. All right. That's about it for today. Any other questions that we didn't get to, again, feel free to send them to info@trade-ideas.com. Anything else you want to add, Andy?
No, just thanks everybody for your kind words, and I will see you on Thursday.
All right, sounds good. This video was recorded. If you missed any of it, it'll be uploaded to YouTube, probably available in a couple of hours on our Trade Ideas YouTube channel. All right, thanks everybody. Good night.
Bye-bye.